Hey guys, Boris from BK Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, and pound dollar for Jan 22nd to Jan 26, 2018. And I think the story this week is going to be very much the anti-dollar stall. It's not so much that we have a lot of positive dollar sentiment coming in this week. As a matter of fact, as I'm recording this, we're actually in government shutdown, so there could very well be an anti-dollar move again, a gap open on the open on Sunday, assuming that they don't work out a deal. But more importantly, I think it's the charts that are sort of starting to communicate to us that the move against the dollar is starting to run out of gas, at least technically. So we're going to take a look at all that in just a minute. But first, let's take a look at the levels and see how they're setting up right now. So on the level side right now, euro clearly has resistance at 23. The big support is at 120. For dollar yen, it's still very much the 110, 112 range. The 110 has been tested a couple of times last week, has held. So this should be a very interesting showdown this week. If we get a very, very negative result, if this acrimony in DC really spills over into potential risk to the economy, that crack at the 110 is going to be very significant. But so far, it's held, and you have to assume that it's going to hold for the time being. And the pound tried to make the run for the 140, kind of failed and died out. We have a little bit of UK action this week as far as calendar goes, but we're going to be watching that very carefully. So let's take a look at the calendar first, then we'll go to the charts. The calendar, we essentially have a smattering of second-tier data: ZOO, IFO, flash PMIs on the European side. We have on the U.S. side really only GDP data at the end of the week, and then trade balance and new home sales, all very marginal second-tier data. None of it is going to have a massive impact on trade. And then on the UK side, I thought we had pound data. Yes, we did. We have the UK claimant count, the employment data, which actually could be significant because we're going to be watching for both how strong the employment data is and how strong the wage growth is, which is the key component to where the BOE is probably going to go. Last week's retail sales were a big disappointment. That was one of the reasons why the pound kind of turned. So we'll see if there's more disappointment coming up in the UK economy going forward. But if you just look purely at the charts, I think the story of the charts is that we're kind of exhausted in this anti-dollar move. Look at this massive move. The euro's had big wave up, big wave up, secondary correction here. Third extension, very, very strong extension for 3 days, all the way out to the 23 handle. And then 1, 2, 3, 4, 5 days without any significant forward movement, suggesting that the path of least resistance now is to kind of let the air out of the tire, move us perhaps down to 21, maybe 21.50. 20 is the very, very strong hard support here off this continuous up leg rally. Now, this doesn't mean that I think the up leg rally is kind of done, but it does make sense given the fact that this 22, 25, if we look back on the weekly charts, let me just pull back very far back here and get out of the way. You can see we have to go back 3 years. But you look at the weekly charts, very chunky area here, this 22.25 area, and natural that we're going to find a little bit of resistance here as we run into this move. Really would have to have some horribly negative dollar news here to kind of move us around and take us out of this range before we correct. So to me, the most likely scenario is that we correct this week. You have to operate against this high as your near-term top and short whatever rally you have here on the assumption that we're going to be correcting. Dollar yen, on the other hand, you can try to buy this bottom. You can sort of say, hey, 110 is pretty much it. But it's very dangerous road to walk still because you really don't know what's happening on the U.S. budget deal. My gut instinct tells me they're not going to want to maintain battle for too long. Just too much political risk here to keep the government shut down for a long time. I think Trump is going to budge. I think they're going to do some kind of a deal. And so the risk here is not as serious as it may seem. Of course, I could be wrong, but my point is that as long as this 110 holds on a technical basis, you sort of have to assume that we're going to be trading back up on any kind of relief rally. So 110 is a natural stop here. Try to buy here, assuming we don't get much worse news and we gap down below it. But you try to buy here with the assumption that we try to rally back up to 112 on any kind of a relief rally. And cable, clearly big fail at the 140. Not surprising. We did make post-Brexit highs here. Big extension. And generally, look at the analogs when cable makes big extensions. Big run, usually followed by at least a stall and some sort of a correction. Big run followed by some sort of a stalled correction. So you have to assume that these this particular level, this 39.50 now is the new high against which you trade on the short side. Try to see if we can deflate this down to 37.50, maybe even 3700. Possibly, knowing that this is cable, could extend itself all the way down to 36. To me, the trade now seems to be to the short side. This is purely a technical analysis for you. If we bust out the highs on all sides, if we take out the 39.50s in cable, the 23.50s in euro, the 110s down to the dollar yen, of course, the whole scenario blows up. But for now, the path least resistance is to the downside. The bet is to sell the anti-dollars as we go into the week. Wish you guys the best luck, the best trading. Boris, over and out.